I am curious, though, because let's just take Bank of America and Citi. And I'm just wondering if, in your mind, the investment thesis or paradigm has changed at all as you get your arms around what may happen next in terms of more regulation, higher interest rate on deposits, which has an obvious and immediate impact on net interest margin, which is so often cited as one of those key drivers of profitability for the banks. And if that is materially changed, then I can't imagine you wouldn't be thinking about what happens now.
Well, we would agree that if interest rates go higher, it's likely that the cost of deposits go up. But it's not a one-to-one ratio. The banks throughout most of history have passed through less than 100% of the changes that we see in Treasury rates on the deposit side. But on the loan side, that gets passed through more quickly. So, yes, there could be a short-term drag on net interest margin, but we don't think that affects the long-term value of the companies at all.
Do you think that loan growth is going to be impaired as a result of this? I can't imagine that it won't be in some respects.
Well, I think a lot of what we've seen over the past week has made the consumer more fearful and probably slows things down a little bit. Maybe that gives the Fed some room next week. But these companies, the story for owning these stocks is not dependent on unusually high loan growth. It's that slow growth in net income, or slow growth in revenues, slight improvements in efficiency leads to reasonable net income growth, and return of capital to shareholders makes the total return on these stocks better than an average company, and you're paying less than half the market PE multiple.
It's interesting, too. I don't know that you had the opportunity to listen to the conversation I had at the top of the program with Adam Parker, who suggested even Bank of America, which, look, people have different metrics in the way that they look at stocks and decide whether they're cheap or too expensive. And he suggested that Bank of America was too expensive in the current environment. I said, well, it was at or even a touch below book in the slide. He's like, no, it wasn't. So everybody has it's always in the eye of the beholder. But how would you counter that?
Well, we think Bank of America is one of the best run banks in the country. It's got some of the strongest, most durable deposits, so a tremendous deposit franchise. And on current estimates, it's selling at just a little bit over 8 times earnings. So we view it as a far above average bank selling at a too large discount to the S&P 500. We think it's a really well-managed company.